everybody, Ben Nelson here. Hope you are having a fantastic day and a good start to your year. 2023, we're already a month in. So hopefully you are making progress towards your goals and taking those steps that you need to achieve those things. So thanks for tuning in to another episode of the podcast. I think I said on my last podcast that I was going to have my guest on this week, but still lining those up. I actually have 3 or 4 great guests lined up. So thanks for being patient. It's going to be worth the wait. We have some awesome guests coming on that I'm really excited to share their stories, to share from their experience, to bring those tips and strategies and all those things to you here. So thanks again for waiting on that. I know just listening to me can be boring sometimes, but thanks for listening anyway. And looking forward to having those guests on. It's going to be awesome. So today I'm going to talk about I'm going to talk a little bit about the market, and we're going to talk about why now is the time to buy real estate. And we continue to see things out there about uh, the market and where's it headed, and all these questions about the economy, uh, and it's really easy to see those and not take action. And so I want to talk today about some of these concerns about just, again, we're going to put some mindset in there just because I don't want you to sit on the sidelines. I want you to know what's going on. I want you to understand, what the things that could happen in the market, be aware, but also to not let it stop you from taking action. I want you to take action. I want you to build your business. I want you to buy real estate. So don't let those fears in the market, don't let those headlines stop you from doing what you want to do, from doing the things that you know you need to do, and getting out there and making some acquisitions, building your wealth, and building your rental portfolio. So, okay, here we go. I'm going to make a few points just about the market in general that will hopefully alleviate maybe some concerns. And actually, before I go there, I'll admit, if you look back, there was definitely at least, a blip last year where we did see a decline in prices. And I'm not surprised about that. If you go back and listen to some of the podcasts I did, for a time, I was like, yeah, it's going to hold steady. I don't see really prices pulling back. Obviously, I was not correct about that. But I do feel like I was right about the fact that we didn't see a market crash. There's been so many things about market crashes and this huge crash that was going to come, and we didn't see that. And I don't think we're going to see that. And I did kind of shift my mindset to say in my, I guess, forecast what I thought was going to happen, that there would be some market pullback, there would be some correction, but that is not the same thing as a crash. So and every market's different again, but here in Portland, I think we saw 10% price decline over 6 to 9 months, from May through the end of the year. And that's okay. That's a correction. That's not a crash. So let's get that straight first. And then, just admit that did happen. Now moving forward, are we going to see more of that? I don't know. Let's see. So let's dive into some of what is going on, though. So the first thing that I want to point out is that inventory is still very, very low overall nationwide, and very low in a lot of select markets. Now, there are some markets that have gotten more towards the oversupply. So you have to pay attention to your local market. Here in Portland, I think we're still only 2.5 months of inventory. It's very, very low. And that seems high when we were at 1 month for so long, but it's not even to the widely accepted, 4 to 6 months of inventory is kind of an equilibrium market. So we're still very, on the supply and demand side, we're low on the supply end. And the thing is that there's not really, in my opinion, going to be a solution to that. In fact, it may get worse because there's not going to be a lot of foreclosures. It's just not the foreclosure numbers. Yeah, okay. Again, we talk about year-to-date numbers all the time, or not year-to-date, year-over-year. Very deceiving. Things can be going up, but if they're going up from all-time lows, it means nothing. Foreclosure activity is so low right now; it's not even worth talking about. I mean, yes, there are people that are in that situation. There always are people in that situation, but compared to historical norms, it's low, and it's nowhere even close to where it was back when the housing market crashed during the financial crisis. So get that out of your head. There's not going to be all these deals from foreclosures. It's just not going to happen. So we're not getting inventory that way. Permits are down. Building permits are down, which and look for some of my shorts and my responses. I saw a couple videos pointing to this as a connecting it to what happened in the financial crisis, and it was one of several videos. So I have to look at the rest of the videos, but to me, that does not say this is correlating to what happened in the financial crisis. This is saying, inventory was already low and now it's going to stay low because builders are not building, or they've slowed down their production. So that's not pointing to a pullback for me. For me, that's pointing towards a extending the problem that we've had for a decade here, since the financial crisis, of low inventory. And then you add on top of that, lots and lots of people either bought or refinanced when rates were 3%, give or take, and now rates are, although they're coming back down, are still 6%, upper fives if you do some buy down stuff, maybe low sixes, up towards upper sixes, sevens for some investor loans. It's going to be very difficult with prices only pulling back 10% here in Portland, some more in some other markets, but and the rate being that much higher, it's really difficult to actually make that change. And even if you have to upscale, you need to buy a bigger house, or you're wanting to downsize, or whatever your reasons are. It's hard to actually do that because your payment's going to be higher. And it is difficult just mentally for a lot of people to say, wow, I have to get rid of this 3% interest rate and I have to go buy at 6. Like, not only is my payment going to be higher, I just can't mentally wrap my head around that. Even though 6% is really not historically that bad of a rate, when you have a 3% rate, it's hard to give that up for a 6% rate. So I think we're going to see less coming to the market because of that. So all of these things add up to inventory staying very low in the foreseeable future. So what does that mean? It means that's going to keep demand up. Even if rates are high, there's less people buying. There's still demand because inventory is so low. Now, there has been a big pickup in activity here going into the new year, and more buyers out there. Mortgage applications are up. People are kind of seeing the rates have stabilized and started to come down, and they're getting off that fence they were on. Well, for I think probably the last half of last year, a lot of people weren't on the fence. They were off the fence completely, right? So they're back on the fence, or they're like, hey, let's jump over this thing and let's get back to where we were last year. Yeah, rates are higher, but we still want to own a house. We still want to buy. We still want to invest. And now's the time to do it. We see a little bit of relief in prices, and we feel pretty good about where this is headed in the economy. There's always question marks in the economy, and when we don't know exactly where things are going to head, but we feel pretty good about the market at least stabilizing. And I will always talk about the last couple of years, last year and the year before, it was not a healthy market. It was very one side. It was very, very, very heavily leaning towards the seller's market, and that is not healthy for the market. It is not healthy for prices to be bid up 10, 15, 20% over list price, and all these waivers of inspections and all these waivers of appraisal. It's not a healthy market. It was way too hot. And so I think we're going to come back into a lot more balanced market, which is good for everybody. Sellers win, buyers win. Properties can still sell. Buyers can still get a few concessions. It's more equal. It's a little bit more, instead of the seller being able to say, this is what I want, take it or leave it. Or, hey, I want to live in my house for 4 months rent free after you buy it. Just all this stuff that is like, I can't believe you're not offering that to me. That sellers had in their mind, it's totally changed. And as I said, rates are dropping, and that's going to continue to bring buyers back into the market. Demand is there; it's just been sitting and waiting. So again, inventory is low; it's going to stay low. Rates are coming back down to where people can. Yeah, they're not 3%. We're probably not going to see that again, but in the fives, that's now people can get to where they can stomach it. They see it's kind of leveling out, and it hopefully will stabilize. But so the demand is there. It's just been kind of sitting and waiting. Um, One of the things that, and I get it, in the last 6 months, there was a lot of question. But as a long term mentality, wait and see, I'm going to wait and see how things turn out is not usually an effective approach. It wastes time, you miss opportunity, you're sitting on the sidelines. And there might be seasons where you do that, but you have to be really careful not to find yourself staying in that place that I'm going to just wait and see where it goes. I'm going to wait and see where it goes, because before you know it, I know a lot of people that did that over the last 5 years. They thought the market was turning. They didn't buy anything since 2015 or something like that. And it's like, man, look at how much appreciation you missed out on. Look at how much opportunity you missed out on. You could have bought uh, a ton more property and done amazingly well, but you were too afraid of timing the market. And I'm going to wait and see what happens. So don't waste time. Don't waste time. Don't waste opportunity. Yes, assess the market, come to a conclusion of where you think it's headed, but don't sit on the sidelines too long. Make sure that you're doing it, maybe taking a pause to strategize, but that you are doing it so that you can then take steps and take action. I also want to make sure people remember you have to think long term. Um, the mindset of I have to, timing the market and okay, well, if I buy now and prices go down, then my investment has failed. No, it hasn't. If you're flipping properties, yeah, that's tough. Um, if you're investing, if you're buying assets to hold long term, a market dip doesn't mean anything. If you have a 5, 7, 10, 30-year approach to it, you're buying assets and holding them, and you're doing all the things that investors do, and not just people that are flippers um, and retailers, and you have inventory that you're buying and turning. That's a different approach. That's not investing. Yes, you're putting your money to work with the hope to get it back, with more friends, right? But it's not truly an investment approach. So, and I'm not saying don't do those things or have it be part of your business. I'm just saying if you're thinking of it as an investment, you really have to get past if I buy now and the price goes down, my investment is a failure, or even worse, the thought of that stops you from buying in the first place, because you just can't handle the fact that I might pay $400,000 for something that could be worth $350,000 in 6 months. Would we all like to pay $350 instead? Sure, yes, but the price is only one piece of your investment, and you can't forget that, because otherwise, again, you're going to constantly be trying to time the market, and that's impossible. And you're going to talk yourself out of buying, no matter what stage of the market cycle we're in, because you're going to be questioning: is this the peak? I don't want to buy at the peak. Is this the bottom? No, maybe not. I'm going to wait till it's at the bottom. Don't do that. You're going to miss so many opportunities. You're going to not buy. You're going to talk yourself out of buying things because you're so focused on price, and you're not focused on all of the other aspects of investing in real estate. You got to remember the ways that you make money in real estate. It's definitely not just price. That's a piece. Sure, you don't want to overpay for something based on today's market value. You don't want to, if you do see the market swinging down, maybe you adjust for that a little bit, but not buying is not an option. Okay. Price is one piece. You have to remember you should be getting cash flow. If you're using leverage, which I always advise and recommend to some degree, everybody's comfortable with a different level of that. But you should have, your loan amortization over time. You have your appreciation over time. Again, if we think long-term, real estate is going to go up long-term, even if there are times when prices adjust and correct and go down. So long-term, you're going to have that appreciation, and you have all the tax benefits. There's so many reasons. You can't blind yourself with just looking at price, that you don't look at all those other aspects that you're getting from investing in real estate, because those are just as important, if not more important. And the bottom line is someone else is buying this asset for you, right? So again, thinking long term, if you're buying something, you buy a house for $400,000. Yeah, it's worth 350 in 6 months, but in 10 years, even if it was still only worth 350, someone else is making those loan payments for you. You're renting it out. That income is is paying for the loan. You're getting the benefit of that loan amortization over time. And even if something never went up in value, you, as long as you're buying right and you're buying something that you are getting that some cash flow from, and you're going to have that asset long term, eventually you're going to own that asset and someone else bought it for you. So appreciation is great. You want to try to buy in markets where you're going to get appreciation. Try to buy in those emerging markets. Sell at the right times when you can, when you see a market maybe is nearing its peak. And I'm not saying don't pay attention to market cycles and things like that, because you can do much better. You can achieve better results when you do pay attention to those, and you can move from one market or one asset class to a different one that's on the edge of emerging, right? And that's how you increase your returns. So you do need to pay attention to that stuff. But appreciation, that's icing on the cake, right? So if you're buying something, you're levering it, you have someone paying that, getting cash flow, and they're buying the asset for you. That is investment, and that's how you control assets. And that's the goal. Control as many assets as you can that someone else is paying for. The goal isn't just to buy cheap or buy at a low price and wait for it to go up. That's great if you get that piece also, but the goal really is to control a bunch of assets that someone else is paying for, or a lot of someone else's, right? You buy an apartment building with 100 units, and all those tenants are paying for you to own that apartment building. And over time, you're going to own it free and clear. And there you go. Unless you re-leverage it to buy something else, which I'm also a proponent of while you're in acquisition phase. So, okay, so I'm going to keep this one short. That was pretty much what I wanted to get across is, this is a good time to buy because demand is still there. Rates are starting to come down. The inventory is not going to get to in oversupply anytime soon. Again, that's a broad statement. Make sure you're paying attention to your own local markets, because there are some markets that have seen some signs of that. But you got to get out and buy real estate. Don't change your goals of making more acquisitions this year. Buy right, know where the market's going, know that if it does dip a little bit more, you still have an asset that is being paid for by someone else that you can control with that income that's coming in, and someone else's debt, someone else's money. So multiple someone else's money paying for that, right? You got your lender and your tenant, and that's great. And if and when prices go back up, then that's just a bonus for you. So, the best time to buy real estate was 10 years ago. Second best time is always now. So don't forget that. Don't put your real estate investment and acquisition business on hold. Get out, buy more units, buy more rental properties, even if it's just one this year. Again, we all have different goals. We all have different things we want to achieve. As the everyday real estate investor, I'm always saying don't let someone else's goals dictate what you want to be happen in your life. Maybe your goal is one a year. Maybe your goal is to own, a couple hundred units or 1,000 units at some point. Any of that is fine. You have to decide for yourself what you need to get you from where you are to where you want to go, and what you ultimately want to achieve with your investments. And then I'm going to end it on this. What we hear all the time, or if we haven't, I can't believe you're probably living under a rock, but if you've been investing for any amount of time, I'm sure heard this quote. It's don't wait to buy real estate and wait, because that's how you build wealth, is by buying real estate, waiting it out, controlling that asset, having someone else paying for that asset with you. So let's go out and do that. Okay. Don't wait to buy real estate. Don't let the market questions, the possibilities of maybe more home price dips, stop you from investing. Don't wait to buy real estate and wait. And I promise you, when you look back, you'll be glad that you did. Thanks again for listening. Join in next week, as I do promise we will have an awesome guest, and then several more lined up after that. So super excited for that. Until then, go out and make sure you're buying some real estate.